Give us your 411 on Bitcoin right now.
The best strategy for our clients that we've recommended is you just want to be a long-term holder. But most people don't approach crypto that way. Most are trading it and want instant return. The work by our technical strategist, Mark Newton, so he thinks Solana, Ethereum, and Bitcoin all have downside. He has been bearish since mid-January. So I think it's been correct. And his downside target for Bitcoin is 62,000 by the end of March. But to me, is 62,000 a reason to turn bearish on Bitcoin? I mean, if you're trading it, yeah, but Bitcoin was $1,000, well, $100 10 years ago. So, 60,000 is still a fantastic return. And I think Bitcoin's usefulness is still improving. I don't think it moves. It's still a risk on asset. So I don't expect it to do well if the market is being hit by tariffs. Like it's not immune to that kind of turbulence. But is the trust around Bitcoin going to grow over the next 5 years? Yes. And is it going to be increasingly viewed as a store of value like gold? Yes, I think increasingly. And then is there room for a lot more people to own it? Yes. So I'm not really bearish on it, but I think in the near term, it's hard to say it should go up right now.
Yeah, you do a lot of correlation work, and this is purely anecdotal on my part. It seems very correlated to the NASDAQ 100 right now. Is that fair to say?
Yeah, it makes sense. It's a risk on asset.
Yeah.
BitcoinZella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZella today and enjoy the new edge. Tom Lee shares his crypto outlook, explores why bears sound smart but are usually wrong, and reveals bullish predictions. Watch now to uncover insights and fuel your next strategy.
Most people want to disagree with what they're hearing. So if they see this markets are up and people are happy, they don't want to hear from someone saying the market's going up for the right reasons. They'd rather hear, here's why everybody else is going to be wrong. And I think a second thing that I've heard said many times, and it's generally true, bearish people sound smarter. But it's because, the bullish arguments are like time, faith in, capitalism or whatever.
So nebulous things, but that have historically worked. But it's more than just nebulous things that have historically worked. I mean, there's a method, there's a process to your work that is not just, put your finger and you lick your finger, put it in the air and say the market's going higher. So I understand what you're saying. Okay, let's get into process then, because there's a process behind this too. And I would submit that if something changed in terms of the backdrop, in terms of outlooks, in terms of the environment that we find ourselves in, you would change as well.
Yes, that's right. I mean, if we were having a recession, that wouldn't be a bullish case, or if there was an exogenous shock that was going to cause markets to reprice, you can't be bullish on that unless it's at the extreme, right? So like, in other words, if people have turned something into a crisis, should just be a scare. That's when opportunity emerges.
BlackRock, the world's largest asset manager, has introduced its first Bitcoin exchange-traded product in Europe, responding to growing investor demand for exposure to cryptocurrency in key global markets. The iShares Bitcoin ETP is domiciled in Switzerland and listed on major European exchanges, including Paris, Amsterdam, and Frankfurt. This move follows BlackRock's success in the United States, where it garnered more than $50 billion in similar products after receiving approval from the Securities and Exchange Commission in January 2024. Coinbase has been selected as custodian, with Bank of New York Mellon serving as administrator, underlining BlackRock's commitment to robust institutional partnerships. These collaborations aim to offer greater security and transparency, making digital assets more appealing to traditional investors. By expanding its Bitcoin-focused products beyond the U.S., BlackRock could further legitimize cryptocurrency within the mainstream investment community. Over time, this development may inspire broader acceptance of digital assets, reshaping the landscape of global finance.
What separated you from the pack in that situation? Because I know we've talked about this, but I think it's interesting to reflect back now, because a lot of folks thought that we might have a similar sort of year this year, and we're 2 months in, it just seems a bit rockier. So curious, like, how you're thinking about that now that the R word's coming back into the into the mainstream a little bit.
One of the reasons we weren't that cautious or expecting a recession is that a recession is often two conditions, not just one. Most people thought, hey, the Fed tightens and Feds are responsible for all recessions because, they say expansions are murdered by the Fed. But really, that happens when the economy has exhausted incremental return on capital. And if we go back to the 2021, 2022 period, private investment spending as a percentage of GDP was still near recession levels. So capital spending wasn't exhaustive, and consumers' debt service ratios were still at recession lows. So it was hard for us to argue that the Fed and its tightening, even though it inverted the curve, would be enough of a contractionary pulse to actually push us into a recession.
Is there a concern, or is it something that people like me talk about and are concerned, but are concerned for the wrong reasons? The employment picture, which seemingly is fantastic with a 4% unemployment rate. There's some things under the surface to suggest maybe things are turning. Employment, how's your outlook there?
I think the employment picture is going to get pretty messy this year, but for obvious reasons. There is availability workers might be diminishing because of deportations or fears of people getting deported, so there may be fewer people showing up for work. And then DOGE and the changes in how NGOs are being funded, and the austerity from that is going to show up because many of these federal employees are still getting unemployment benefits, so they're not filing claims yet. But I think you're already seeing it in like Washington, D.C. Jobless claims are picking up and Zillow real estate listings are picking up. So I think that there is a spillover already happening. So it's possible that this year in the first half, the job market could be missing consensus by 50% for a while, and it'll get people scared.
XRP has shown signs of recovery, climbing around 7% in the past 10 days as broader crypto sentiment improved, and Ripple's legal challenges with the U.S. Securities and Exchange Commission reached a conclusion. Its current value of $2.44 still sits roughly 30% below the multi-year peak of $3.40, raising questions about whether the market has enough momentum to push prices back above significant resistance levels. Recent data suggests XRP's futures market remains subdued, with open interest below $4 billion, well off the highs recorded in January. Funding rates have lingered near negative territory, indicating a mildly bearish mood among traders. Meanwhile, whale activity has been unusually quiet, as wallets holding between 1 and 10 million tokens have neither significantly added nor reduced their positions. This lull in whale-driven volatility may be creating a wait-and-see environment, limiting dramatic price swings. Much depends on XRP's ability to hold above the psychological support near $2.40. Failing to maintain that level could invite renewed selling pressure, especially if major buyers remain on the sidelines. If XRP does drop below $2.40, traders will likely look toward the $2.22 to $1.90 range for potential support and possible short-term rebounds. Without a surge in trading volume or a pickup in large-scale purchasing by whales, XRP's price movements may remain constrained. Observers await signs of renewed buying interest, whether fueled by positive macro shifts or improvements in on-chain metrics, to determine if XRP can break free from its current consolidation phase. Soon, some traders foresee a bullish rebound. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.